25% capital gains per year and currently a dividend of 2% on top. That's for a stock you've probably never heard of. Find out which stock it is and whether you can expect similar returns if you buy the stock today. Welcome, my name is Thorsten. I'm the founder of Dividend Stocks Cash. We have more than 110,000 members, registered members all over the world. It's about investing, finding and investing quality stocks. We want to profit from capital gains, sustainable capital gains and sustainable dividends as well. Little disclaimer, don't buy blindly what I am telling. I just tried to present you promising stocks, but nothing is 100% for sure. Please do your due diligence on your own before buying the buy button. Okay, that was the disclaimer. Now comes the fun part. IDP education. Did I promise too much or do you know the stock? If you know the stock, drop a comment below. I will be surprised. Except if you are from Australia, then I'm not surprised because it's an Australian company. And first I told you about the performance of the stock. Let's check here on the performance chart. And you see here, if you connect to the actual stock price from the IPO, we have here an annual yield of 24%. So I was lying, it's not right, 25% for years, only 24. Obviously, when I prepared the video yesterday, it was still 25%. So the stock is even cheaper today, yeah. And if we add dividends, the total return, it will be 25, believe me. So, but the most gains you make with this stock come from capital gains. Maybe I should explain what this company is doing with a market capitalization of 3.6 billion US dollar. So it's a mid cap, let's say it's a mid cap. And we have here the different segments. EDP education, so the name education is already a little bit, speaks for itself. We are in the education business. Education, super important, was never more important than it is today. And education is done on universities, and many students want to go abroad, to study abroad. And this is where EDP education comes into play. They help students by to search, find the right university abroad. This is the segment student placement. We can see it here, student placement, with operating margins of 86%, which is really high, responsible for a little bit more than a third of complete sales. We also have another segment, the largest one, International English Language Testing System Examination. So it's a language test, and this test is done by students, of course, but also by working people already who want to go abroad and work there, or by migrants also who want to prove they can speak, and where is it important to have this, to show that they can speak the English language. Okay, like me, maybe I should also pass this test, don't know. And then we have other segments. We have this segment digital marketing and event, and by the way, 48% operating margin. Then we have this digital marketing and event. It's also growing, as you can see, with more than 50% operating margin. And imagine that this business is highly digitized. They also have their own apps like Fastlane and others, so they collect a lot of data. Data is valuable, especially for the universities, because they also want to get the best students and to streamline their selection processes of promising students. So also universities are paying EDP education, but not that much. It's just 5% of total sales. And then we have English language teaching. You can see it here. They have schools offline, online. This is responsible for 3.4% of total sales. And you always see here that something happened in 21 and 22 for English language teaching and for student placement as well in 21. You guess what? Of course, Corona was not very supportive for the business. Here you can see it, what it meant for the earnings per share and the dividend cut. Yeah, if you have lockdown, if you have travel restrictions, of course, I think I don't need to explain. But we have dividends here on all-time high. We have earnings on all-time high, so we have a very good recovery, but the stock price did not recover. And that's the point. We have margins which are very high, on all-time high. Also, we have a balance sheet which is okay. We see goodwill, so we have organic growth, but also inorganic growth. Goodwill means companies were bought for higher purchase price than they were worth according to the balance sheet, but we have enough cash in the balance sheet, even covers 1 year of dividends. Dividends paid 96 million, cash 166 million, and we have dividends covered by free cash flow and earnings, although a little bit. Payout ratio is not that low, with 77, respectively 87%, depending if you base it on earnings or free cash flow. But they are covered, and analysts are very optimistic that earnings and free cash flow continues to grow dynamically. What means dynamically? We have here the matrix, and here, for example, we have earnings growth between 40 and 20% in the long term on average, and all the other metrics, you can read them here. So what's also interesting, of course, is the current valuation of the stock, because if the stock is undervalued, you can expect not only returns based on the growth rates, on the long-term growth rates, but even more, because the stock is right now undervalued, and when it regains its valuation, then you get an extra boost of return. Okay, let's check the multiples. We have the multiples based on the adjusted earnings. Here we have outlier. It's not representative because earnings went down, and the stock price not that much, so multiples went up. But for example, you can use price sales much better because revenues were more stable than here you see it, the earnings. And here you can see that the average price to sales in the last, don't know, 9 years, 7 years, whatever, was 6.6, and now we have 5.6. So we have slight undervaluation according to the price to sales. Let's go to the fair value and calculate a little bit more in detail what to expect. We have the adjusted earnings per share. We have the earnings per share. We can use these at the fair value. It is here. Then you can see that we had this tremendous overvaluation here when the stock was close to 40 Australian dollar. Now we have stock price below 20 Australian dollar. Fair value here close to 25 Australian dollar. It is already undervaluation. Then we have this earnings growth resulting in fair value growth. This is only one lost analyst who estimated earnings per share of 123 US Australian dollar. Don't take this for serious. Stop valuation here. And this is, I don't know what you were thinking, but it seems to me a little bit too optimistic. What we can also do is we use the fair value price to sales. If we do this, we get automatically more conservative with our valuation. Why? Because if we return to the quality check, we see that the margins are on all-time high. That means revenue was never as precious for this company as it is now, because we have more profit now for 1 Australian US dollar than it was in the past. And if we now use the calculate the fair value based on the historic average of the price to sales, we are automatically more conservative, more careful in our valuation. I will do this, and that's it. Here it is. And then we have a fair value which is lower, 22.50 Australian dollars. So we still have undervaluation, but a lower undervaluation. And I will take this. And if you want to get the expected estimated return according to the fair value, I also go to 26. Then we have here a fair value of 30.60 Australian dollar, which is still clearly below all-time high, and this corresponds to an annual expected yield of 22%, which is close to the 25% we have when we add the dividends. Here's also dividends added, okay? Now you can say, this is still too optimistic in my point of view. Then you can say, okay, let's check, for example, with a fair value of 24 Australian dollar. What does that mean? And then you still have an expected yield of 10.6%, which is still a market beat. And of course, you can also say yourself, I'm setting a buy limit, for example, here 36 Australian dollar, then 10 point something, already got 30 point something % expected yield. You can set the limit here. You could make now 80.50 Australian dollar. Then you save it, and then you get notified by email when your buy limit is reached. Okay, to me, ETP education is an interesting stock. Was worth a video. What do you think? Please drop a comment below. Happy to discuss. Thanks for watching and see you next time. Bye bye.